Morning. Good morning and welcome to the morning market wrap for the 18th of August 2015. I'm Greg McKenna and here's the overnight action. The big news, of course, is the continued crash in commodity markets. We saw oil fall again another 1.5% last night. That took the front contract, which expires this week, down below $42, and took the second contract down to $42.40. It continues to be the big fall after oil recently broke the uptrend from 1999. Copper was lower as well, and the CRB hit another 11-year low. It didn't really hurt stocks in the US though. They recovered from early losses after the New York State Empire Manufacturing Index. There's not a lot of manufacturing in New York. I remember when they first started this index a decade or so ago, and people were kind of thinking, why? But they did, and they have. But Barclays economist said you can take that number with a grain of salt. The market preferred to concentrate on the release of the NAHB Home Builders Survey. That showed that confidence from builders in the sector was at a 10-year high. So that's pretty positive. That together with the employment scene really does suggest that zero interest rates are incompatible with the current pace of the US economy. In Europe, it was a different story. The FTSE was flat. That was really interesting. We had the article in the Telegraph yesterday from Bank of England MPC member Forbes, Kristen Forbes, which basically said that they need to raise rates before things get to 2%, before inflation gets to 2%. Initially, you would have thought that could have driven sterling up to 157, something like that, and seen the the FTSE under pressure. But this morning we've got sterling down at 155.82. Sure, it's only off 70 or 80 points from yesterday, but that's a really interesting dynamic, which I quite frankly don't quite understand. Perhaps it's the continued fall in oil, which has got people thinking. Perhaps it's the proximity of the CPI and PPI tonight, which are likely to be low. So I guess on the one hand, while Kristen Forbes is saying we need to move before inflation gets to 2%, the flip side of that is if oil continues to fall, then the chances of the path toward 2% being established to the extent that the Bank of England needs to tighten is less likely. So, but that's a very interesting dynamic in forex markets. The DAX was down in the red and it missed the US recovery. The ASX SPI 200 had a very interesting night. At one stage, the low on the futures were 52.66, but they managed to rally to finish up 9 points. To imply another modestly positive bias for the Australian market. The banks were all up yesterday. They did reasonably well, and the CommBank was only down 1% after its capital raise, which wasn't a terrible performance. Overall, though, from a technical perspective, the market still does look a little bit weak. I'm expecting a bit of a consolidation, I guess, perhaps even a test higher of the break of the uptrend line from last week, but overall, the bias looks lower. On rates markets, the surprisingly weak Empire report drove bonds lower. That's what Westpac's Wellington strategist Imre Speiser said anyway. But I'd like to add that there's probably little doubt that the deflationary pulse that's going to come from lower commodities, from lower petrol, is going to keep bonds bid, if you could put it that way. The other thing about that is that ultimately that has to be a good thing for the global economy. Sure, there's talk around about we've lost our global shock absorber because China's turned inwards and is focused on its own economy and employment and that sort of stuff. But to the extent that lower oil prices put more money in people's pockets, that has to be a good thing, because these are increasingly service-based economies around the world. So the manufacturing, I'm putting less emphasis on manufacturing data and more emphasis on services data and what the service sector and the consumption side of the economy is actually doing. On currency markets, the RMB fix yesterday came and went without too much trouble. 6.3937 was where it finished yesterday afternoon. The US dollar is mildly stronger with the dollar index at 96.82 and euro back under 111. Most interesting, I think, that's happening is the crash in emerging markets again. Russia hit a new low. Obviously, there was some terrible things happened in Thailand last night with the bomb explosion. Anybody that's been to Bangkok and been to that shrine, you can kind of, the sense of what could have happened is palpable. But Ray Attrell from National Australia Bank today said that what's going on at the moment in emerging markets is it's not just the commodity-based ones, that are coming under pressure. It's also the politically unstable ones that are coming under pressure. So that means Thailand's going to be added to that list, along with Brazil and Russia and a few others. In terms of the Aussie, it's gone nowhere in the last 24 hours, but I guess the big highlight for me is that Atchell and his colleagues at NAB have downgraded their forecast for the Aussie to 68 cents for the first half of 2016. That's no big deal. I think it's going there. I think it probably could go lower. But for a major to come out, and somebody who's very good at the Aussie like Ray's one of the best currency strategists on the planet, has been for years, to say that means that there is going to be lots of downward pressure. Anyway, to the overnight scoreboard. Dow Jones was up 0.39% to 17,545. The Nasdaq rose 0.86% to 5091. The S&P 500 was up 0.5% to 2102. In London, the FTSE was flat at 6550. Frankfurt, the DAX was down 0.41% to 10,940. Let me just confirm that. Yes, it was down. I'll have to fix that. Tokyo, the Nikkei rose yesterday. Shanghai was up. Hong Kong fell, though. That's really interesting. The difference, the pressure that Hong Kong was under last week and what it's feeling again yesterday bears watching in terms of what people are thinking about China and how growth's going to go. ASX futures, as I said, were up 9 to 5,311. The Aussie US dollar 73.71, euro 110.76, dollar yen 124.37. Not a lot of movement there at all. Only big mover was sterling 155.82. Dollar CAD 130.79. It's not going anywhere either. Front month crude 41.90. The back month is 41.87. I might just share my screen here so you can see the. How are we going? Yeah, we can see the crude. So this is the big monthly uptrend that's gone back to 1999. It's a long-term chart. Obviously, we've broken down. We've had a bit of an acceleration, and that can probably get maybe even 30 odd bucks. David Kotok from Cumberland Investors, who a lot of Americans like to follow, and is a big name in the US. He reckons it can get to 15 bucks. And yesterday I was reading John Malden's thoughts from the front line, and he talked about the differing cost curves for the frackers and the shale oil industry in the US, and the fact that the Saudis have completely misread it. So it does seem like there is continued downward pressure on oil. We haven't had a pessimistic crescendo yet, so it's probably not the case that it's bottomed. So that's it from me. Have a great day's trading. All the best, and I'll catch you again tomorrow morning. Bye for now.